Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Kevin Mahn, who's the CIO of SmartTrust Unit Investment Trust. Thank you so much for joining us. It's
My pleasure.
Very different conversation than we had in January of 2018. 2019, we're starting to kind of have that slowdown conversation.
Yes. I think the theme of 2019 will be slowing but growing. The economy will start to slow, but it will still be growing. Earnings will start to slow, but they'll still be growing. And if, in fact, the Fed is turning more dovish, that should be constructive for stocks, certainly during the first half of the year, although the days of volatility aren't behind us just yet.
Yeah, I mean, the way 2018 ended, I think, certainly was a shock for many people. And now we're also starting to hear the R word out there, recession.
Yes.
Does the threat remain low at this point?
Very low. Even if the Cleveland Fed's indicator, it's around 20% right now, or if you turn that around, there's an 80% chance there won't be a recession in 2019. But that doesn't mean the economy won't be slowing. And I think investors should take that consideration as they start to allocate their assets for this year and in 2020.
Right. Well, I think there's also a disconnect between markets and what you're seeing with earnings and the economy, because the earnings and economy have been relatively strong. So it does lend to your case about being constructive on stocks for 2019.
Absolutely. And I think we'll see fourth quarter earnings be strong once again. We see a healthy consumer who spent quite a bit at the stores this holiday shopping season. And we expect GDP growth to be around that 3% range for the fourth quarter as well. So I think that does show signs of a strong underlying economy. Now, where to find investment opportunities in that strong underlying economy, I think you have to look outside of your traditional asset classes.
All right, and what are some of the themes you're going to be looking at for 2019? I mean, M&A, that's certainly one of them, and look at the way the year kicked off with the big healthcare deal.
Absolutely, and I think biotech M&A is going to continue to pick up in terms of the pace of acquisitions. Just this morning, we saw with the acquisition by Eli Lilly, we saw a couple weeks back the acquisition of Tesaro by Glaxo, and of course, the big acquisition of Celgene by Bristol Myers Squibb as well. I think this pullback that we saw in biotech will lead to more acquisition opportunities, and that's an investor should seriously look at for 2019.
Are you warming up to emerging markets yet?
I think so. I think if you look over the next 2 years, the pullback we saw in emerging markets last year, we see some pretty important talks this week taking place between the U.S. and China. If, in fact, there's any form of a compromise on the trade talks or any removal of the existing tariffs that are in place right now, you could see that cap that's been placed on China and emerging markets as a whole being lifted, and you could see some nice growth opportunities.
Right. Well, I mean, it's exciting to hear that you're constructive on 2019, but we can't forget that there are a lot of risk factors out there.
Absolutely.
How are you, how do you manage that at this point? People staying invested? Are you looking for the value deals right now? How are you navigating this environment?
Yeah, I think this is a real wake-up call for investors to be honest about what their true risk tolerance is. The benefits of diversification will certainly ring true in 2019. So some blend of quality equities and quality fixed income investments, and maybe even considering adding gold to your portfolios, are worthy of consideration.
All right, Kevin, thank you so much for joining us.
My pleasure.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.